Good morning, traders, and welcome to Phoenix Blue's morning update. Today is Thursday, the 21st of July. Hope you're all well this morning and you're ready for an exciting day of trading. My name is Nishal Patel. I'm going to be taking you through the markets for today, giving you a quick snapshot of what's transpired over the course of yesterday, and potentially what we here at Phoenix Blue are going to be trading. First things first, just having a quick look at global indexes. Now, as we can see, early hours of this morning, Asia's closing off on a surgent high. In fact, we are hitting market highs, especially over the course of the last 9 to 10 months. The Nikkei is floating really high at 16,810, and we can see the Hang Seng is doing likewise. It's also pushing. The S&P also, just so you know, is also having a little bit of a surge. That really trailed on from the Americans and how the Americans had panned out. Again, they had finished off on a very on a high. The S&P is still pushing, which I'm sure many of you would be keen to hear, and I'm sure a lot of you are trading. Well, I hope you are anyway. But going over to the European indexes, in particularly the mainland ones in Europe. So we're talking the CAC, the DAX, the MIB, and so on. They will stagger today. I'm guessing they're going to be looking to buck the trend effectively and not follow suit in accordance with the rest of them. There is a good explanation for this, and primarily it's got to do with our next slide here. Just having a quick look at what news announcements we have here. Now, what you should see is slap bang in the middle of that news announcement, and there aren't too many, as you can see. Only three primary currencies are affected. Obviously, the USD later on this afternoon, with the unemployment claims and the manufacturing index coming out at 1:30. Obviously, that will have a knock-on effect to all majors and minors, being the fact that it's on the USD. But the euro has an ECB press conference, and that's going to be very big news. We've got retail sales out on GBP at 9:30 as well. But let's have a look at why and how this will really happen. And before we talk about before I talk about all of my charts, I just want to let you know what we should be expecting from the ECB, because that really is a big talking point for today. I would say it's the biggest news announcement for this week. The ECB are having a meeting later, and many on the marketplace, many of us traders are assuming that they're expecting to keep rates on hold. So no lateral or movement from the ECB in terms of their policy. Obviously, this is good for them, and the reason why is they want a slightly weaker dollar. Sorry, slightly weaker euro. Apologies for that, because that for them really really bolsters the economy out in Europe, and it's really what they're after. So not, I don't think they're going to rush into making any changes right now. The euro is sitting very nicely for them. It's not overly strong. It's fairly weak, so it's helping them out. And many people are probably thinking, well, why are central banks looking to devalue their currency? And how does that help them? Well, it's the course across the board from the yen over to the dollar. It really is to do with stability and maintaining growth. So, if you're a little unsure on that, feel free to contact us and we'll give you a stronger elaboration of how and the dynamics of how stability in an economy can come from a slightly weaker currency. Okay, so ECB is the main talking point. We did have a look at the indexes, and we did see that we are seeing a surge in a lot of our indexes. The direct correlation would be to a safe haven such as the yen. or in this case, we're having a look right now at, we're actually having a look at gold. And as we can see, gold is doing great right now. It's currently floating in and around, in fact, I'll just show you accurately, just floating around that 1319 level. That yellow horizontal or reaction zone or level of support and resistance is off a weekly time frame. Gold has broken out of what we saw as a symmetrical triangle up here, as we had seen. Really looking for a clean breakout of that triangle. Now, intraday, we've been trading this at Phoenix Blue Short. Which has done really well, especially yesterday. Yesterday we saw the breakout. It's come back, and it's come back to that 1319 level, as we just saw, as I just pushed over to that hourly chart like so. Just literally finding resistance, testing that level nicely. It's a good place on in an intraday environment to take another short position. And remember, as we see a risk-on scenario where investors are seeking profits on equity markets, we will have investors pulling out from safe havens such as gold. We also have seen a surge in the greenback, so the USD is picking up pace. The dollar index is looking very strong right now, so that's obviously gonna have a knock-on effect across the board on a lot of currency pairs. Many probably would be looking at something like the Kiwi to look to exploit, and most certainly this is a trade that we've been looking. Well, this is a currency pair that we've been looking to trade quite aggressively, quite recently, and trying to find viable entry points into. As we can see the New Zealand dollar slowly make its way to that 0.67949 level that's highlighted on my chart. And I say slowly, but realistically, it's just about a week, I would say, of a week of working days that the Kiwi has made its descent, effectively depreciating against the USD. USD really picking up the pace against the Kiwi right now. Right now, floating at 69.83 circa. And we should probably expect it to carry on in this way. Now, there was a news announcement that probably many of you wouldn't have seen because it wouldn't have been highlighted on a lot of your calendars, but really is coming from the central bank in New Zealand, and they have released an economic assessment with their take on what's happening globally and how they should be looking to adjust their fiscal and monetary policy accordingly. We do know that in August we are expecting, well, they've already told us on the 11th of August, they're expecting a 25 base point cut, which equates to 0.25%. So cut down to 2% in total, which should devalue the currency a little more, which is exactly what they're after. And then they'll probably, just like all other central banks, make reassessments as time passes. The dollar is surging anyway. After Brexit, there's a little more certainty on the markets, especially with what we had discussed in the previous weeks and political stability. Well, a lot more political stability than before. Obviously, they are leading into an election out stateside, so that's going to cause a few ripple effects. That goes without saying, especially with the candidates that are running for it. I don't think anything else needs to be mentioned after that. But effectively, leading into this, we are expecting the Fed to have a cut at some point later on this year. Potentially another cut, equating to two in total for the year. Maybe two. It really depends on global global conditions. But the Fed right now, they're not looking too much at what's happening in the world. They're trying to gauge it off their own back, and trying to have a look at how they should adjust the greenback accordingly. But we are probably looking at a cut later on this year, and the markets are full well expecting this. So what we're seeing is we're seeing a resurgence in the dollar right now, and that's taking its toll on many of the majors and miners. So we just had a look at Kiwi, we had a look at gold, which is doing really nicely and definitely in shorting territory, very much like the Kiwi. I'm going to have a quick look at WTI, because WTI has surged over the last day, as we see. So it has notched up. That's helped out a few of the equities, in particularly those that are reliant on the price of oil. So having a look at WTI right now, just sitting just below $46 a barrel. It has come down, as we've seen. We've tested this very strong level of support and resistance, and for those people that want to put horizontals on there, you will find a very strong and firm level. I know I've got some moving averages, and it seems that it's coming off the moving averages. The moving averages, without a shadow of a doubt, are helping out. But if you literally put a horizontal in, you should see, and we're just having a look at a weekly time frame right now. I'm just going to literally not put too much into this in terms of integrity checking of my level, because we're going to make this video fairly quick. But as we can see, we've got supports. We've got supports on a daily time frame. No doubt you see it, because you've got some opens and closes rather than just clean touches. Clean support here. We've got support going into resistance, shown by this particular week here. We have seen a break, but remember, on the daily time frame, that will come up quite nicely. Again, some very nice clean touches. So we've got that support level for oil, effectively, not just these moving averages. And we're seeing a slight movement back up to the high of its range, in and around the high of its range. Probably may see oil within this area of consolidation for some time. But for us right now, what we're going to be looking for is a clean break below this level if you're looking for longer term trades. If you aren't, and you're looking for the shorter term trades, by all means, I have been trading it from the top to the bottom of the range, which have been giving me some very nice intraday profits as well. But some experience is needed. Moving swiftly over to the S&P 500. This is a weekly time frame. As we can see, we're at an all-time high. Moving over to a daily time frame, we can see we've tested this 2174 level. It's actually 2175. It's been reported that the high has been, as we've seen a slight break of that level, like so. Just sitting below it right now. Probably looking to pull back at some point. We may see a shallow retracement. If we do see a shallow retracement of any kind, remember, that really gives us an indication that price action is gearing up for a strong move in the direction of the trend. In this case, it's upwards. So we've got another index here that really is flying, and giving us some very nice profits. Final thing I want to have a quick look at is the yen. Again, the yen's coming up and has hit that 107 level. Obviously, from the lows that we saw at the start of July, back up to where it's at, we've obviously seen a depreciation in the yen. It's probably exactly what they want to see in Japan, and we do know that Japan are looking to bring in monetary and fiscal policy to control the yen. They are looking to devalue the yen a certain amount, and there are reports of certain stimulus package put forward by the Japanese government in the trillions of yen, to help them out. So keep your eye on the Japanese yen. So, guys, wrapping up, Japanese yen, very big talking point. Obviously, gold, really is moving. The indexes are flying as well. The Kiwi is doing really nicely for us. And one thing I haven't actually spoken about is CAD. CAD looks like it's gearing up for a very strong move long. We should be looking at that and watching it. We're looking for it to break out. When it does, no doubt we're going to be taking profits on that as well. But right now it's all quiet on the CAD front. We are seeing that dollar strength, so we're looking for that dollar strength, or that resurgence of the dollar strength, to really help us out on this particular trade as well. Until next time, guys. Happy trading. Goodbye.